So, hello everyone. Good to see y'all today. We are here with the Velodrome Finance team. My name is Rob Montgomery. I'm the CEO of Revest Finance. And yeah, we're here to talk about what we've been doing lately, what we're doing with the Velodrome guys, and how this is going to be impacting the DeFi industry moving forward. So, let's go. Using this software in a while. As you guys may have gathered, I stole it from Austin. But let's go ahead and get started with, I guess, some introductions. So I've already done mine. The CEO of Revest Finance, been in crypto since 2013. Only really been working in crypto since 2021. Started off with the Revest protocol, and now we are brand new protocol Resonate, for which we have got something absolutely wonderful set up with y'all. I'm going to go ahead and pass it off to Adam, let him introduce himself, and go from there.
Hey guys, I'm Adam. I'm the lead biz dev for Revest Finance. That's about it. I could talk all day, but I don't want to steal these guys' show. You know what I mean?
All right, let's start with Alex and head over to Tal from there.
Yeah. Hey, I'm Alex. I am one of the founding members, and on the core team for Velodrome. And I work on things like biz dev, operations, marketing, and communications.
And hey guys, I'm Tao, also part of the core team at Velodrome, and similar to Alex, kind of complementing biz dev, strategy, operations, early on doing some of the token modeling, and now working with you guys, Revest, on kind of seeing what other kind of models and mechanics we can add on top.
Fantastic. Yeah. You guys, your marketing is actually, and before we get into it, talking about Velodrome, sharing that with our community, I just want to throw this out there. We took a huge leaf out of your book with what we're doing right now.
Excellent.
I've gained a new appreciation for how exhausting that whole thing must have been.
Yeah, I mean,
we just rounded out.
Yeah.
No, go ahead.
Oh yeah,
sorry.
I mean, I was just going to say,
a little bit of a delay.
Yeah, I've had the opportunity to work in a few different industries, and marketing is one of them. And so I think brought a few tricks of the trade with me into the crypto space. So we really appreciate the compliment. It's a space of such overload. There's so much going on all the time. As clear and as effective and as constant as you can make that communication, I think the better.
Yeah, and I gotta say, by the way, it feels like we have a full team doing socials. It's actually Alex, probably somewhere in his room, just kind of coming up with the next thing to share. Sometimes he just taps us, asks for some data, and then puts it out there. So it's pretty impressive to watch.
That is honestly incredible. Got a one-man army up in here.
Exactly.
It takes three of us coordinating, one of whom is full-time, to run our social system. That is incredible, Alex.
Thank you.
It is. I don't think people. I think a lot of the public go into those sorts of systems, and as a founder, I know what the sheer volume of the material you guys putting out must be taking. So good stuff. But let's head into our first topic, mindful of time. And we want to, already about Velodrome, but I'm sure there's some folks in the audience who haven't heard your guys' story and how your system works and the economic value that it offers. So either one of you, take it away.
Yeah, I'm happy to take a first crack at it. So Velodrome, of course, is a decentralized exchange, automated market maker. It is designed basically to incorporate some of the best and most effective elements of some of the best market makers out there, which would be Curve, Uniswap v2, and Convex. It sort of rolls all those mechanisms into a single AMM design, and sort of shifts some of the traditional incentive models a bit to provide what we think is a really well-rounded next-gen AMM. If anybody doesn't know like the bigger backstory behind this, I mean, this was basically Andre Cronet's sort of last big effort in DeFi is he sort of looked at, you know, all of the successful models out there for AMMs, what had worked really well about them, what had worked less well. And he said, I'm going to basically develop a better one that brings together the best of each, aligns incentives in a way that is much more conducive to incentivizing active versus passive liquidity, redirects the rewards in such a way that it's more about rewarding sort of protocols and sort of things like that. And he launched Solidly. And if you're in DeFi, you probably at least caught wind of Solidly, right? And we were at that time members of VDAO, right, who were sort of intimately engaged with, you know, what was being called at that point the Solidly Wars. But, you know, we noticed, as many people noticed, a lot of flaws in Solidly. Not so much to do with sort of the core protocol design, right? The thinking was all there, the core mechanics were all there, but there were some very critical sort of bugs in the system. There were some things that we weren't quite clear if they were intended or unintended that we think threw off the incentives. And since we had sort of a front row seat to this, I mean, we were even, you know, key members of ours were even engaged with Andre prior to launch saying like, hey, I don't think you want emissions to work this way, right? We basically, you know, kept a very mental list that turned into a written list about all of the different sort of aspects that you would need to sort of tweak, adjust, or modify to really make this model work, because we believe that the model was not the issue. We believe the model was what Andre promised, the next gen AMM, but we saw an opportunity to basically make some adjustments, bring it to an ecosystem that really needed it, right? That had that sort of product market fit for a base level liquidity layer and launch there. So that's the sort of Velodrome story, but I also want to give Tao a chance here to get into maybe a bit more of some of the deep benefits of the model.
Before we jump into that, I'm just gonna say I hear exactly what you're saying. I was around for the whole Solidly saga, I guess you would call it at this point. And I remember when Andre blew up on Twitter at certain members of the Phantom community for setting up tokens in a way that he hadn't expected. Everyone was very confused until we started to dig into it and realized, oh wait, this mechanism design just accidentally gave people $5 million worth of Solidly completely by accident on their part, but edge case. So it's been impressive seeing you guys actually manage to patch this thing up and get it rolling. I'm gonna pull this comment up real quick. Yeah, dead on. Tal, I want to hear what you have to go with, please.
Yeah. You know, as Alex mentioned, it hasn't been the easiest journeys kind of adapting this new model, which we saw had a lot of potential. So a few things that we noticed were kind of bringing in the next generation of AMMs through the kind of like the way that Solidly was designed and now Velodrome is designed, is that it's sort of, if you look at the landscape of DeFi, especially, you know, decentralized exchanges, you basically have on a decentralized exchange, you always have the providers of liquidity that are giving a service to the exchange, right? They're taking a risk adding other 1 or 2 tokens to the platform, basically foregoing the right to sell those tokens, and usually in exchange for some kind of benefit, right? Either they get kind of like the fees that are being accumulated from traders that come in and use the tokens being provided, or some sort of emission model. And what Velodrome does really well is it basically kind of consolidates the attention, the incentives, the capital into one platform, which any protocol can take advantage of. So it has like so we have this constant emission schedule that everybody can kind of read on our tokenomics that is very predictable. You have Velo tokens basically emitting on a weekly basis, and then you have the lockers of the tokens that can then vote on what liquidity pools the tokens go to. And they have this incentive. So basically, if you have Velo token, you can lock it for up to 4 years, which in crypto means forever, right? You're sort of like giving away the right to ever sell the token if you lock it for 4 years. But you can, in return, you get all the fees that the platform is accumulating from trades. And also this mechanism bribes that we saw Curve eventually used through the new layers like Convex and Vodium. But this one, we have built-in bribes on Velodrome. So it's a mechanism that protocols can tap into, basically giving tokens to voters in exchange for their votes. So that way voters are compensated for having locked their tokens, and protocols can very quickly round up votes for their pools and very quickly also accumulate liquidity for their tokens. So it's kind of like this balancing mechanism where if you're a protocol that wants to launch an optimism or has already launched and you want to maintain liquidity, you can do it either by locking Velo, accumulating and locking Velo, or bribing. So it adds kind of like these layers, this new level of dynamism on the platform where protocols can follow whatever strategy they think is the most capital efficient, and you see the results as well. Usually a bribe turns into 2 or 3 times as much value in emissions by the votes that it tends to attract. So your protocol, you deposit $1 in bribe, you get $3 or $2 in emissions. So basically you multiply the incentives that you can provide. The alternative is to just do the regular sort of like pool 2 emissions, which is basically deposit tokens that go directly to liquidity providers. But again, on Velodrome, you can multiply basically the effect of the incentives that you're depositing. And at the same time, if you decide to go through the buy and lock or accumulate and lock, because you can also farm, of course, as a liquidity provider, you get the tokens eventually, which you can then take, lock, and now you become a voter. And now you have also sort of like this new revenue stream. You get the bribes, you get the fees, and you're getting emissions going to liquidity pools. So hopefully that wasn't a little bit too fast or too complex. But what the bottom line is, we see that it's very valuable for protocols that want to maintain liquidity for first of all, deep liquidity and for a long period of time. So basically, we're giving them additional runway. Any new project, or especially now, right, where markets are volatile, they're tricky, having a place or the tools to extend your runway by making it cheaper to incentivize liquidity can be very valuable, right? Like instead of, if you have a program that's supposed to last for a year of incentives, you can use Velodrome and all of a sudden you have 2 years of runway, right? Using your own protocol's token, which you can deposit. Or if you are, especially stable coins, it's very, very efficient to build liquidity on Velodrome if you're a stablecoin provider. And so you get a lot of liquidity, and at the same time, the stable swap formula that we use is very efficient as well. It has very low slippage levels. It keeps call it the peg on the token for a long period of time, unless the pools get really, really misbalanced, which hasn't happened yet. But that would, of course, be up to the people that are holding the stable coin, right? There's got to be other mechanisms. Bottom line, I think so stables and kind of like new protocols launching on Optimism can find a lot of value on, incentivizing liquidity through Velodrome, or becoming a stakeholder, right? Getting Velo, locking it, and getting some of that yield. So for I think now for 5 weeks or 4 weeks in a row, the yield for lockers has been between 150 and 200% in terms of bribes plus fees. So getting that, a 200% APR on fees alone by being a voter while still holding your position, right? Like you hold your position, you're getting the APR, and you continue to vote week over week, and more bribes are coming in. New protocols are also joining the Velodrome races. It's actually becoming quite attractive for anybody to lock. And in addition, just as a last kind of pitch for anybody that is considering locking Velo, we're running a program where we have a pool of OP tokens that are distributed to anybody that locks 10K or more VE Velo. And it's been running for a few weeks now. And on average, people have got like between 20 and 30% kind of cash back, call it, or OP incentives for locking Velo. So you get this incentive upfront, and then you get to vote and get 200% or so, 100 to 200% APR on a weekly basis just by voting. So, so far it's been even for us that have locked ourselves some tokens, it's been a really fun game to follow along.
Honestly, the incentive model you guys have set up, I don't think I realized until just now that you allow projects to decrease their burn rate, which is really incredible, because that means that we have that what Resonate is doing does similar things. So we layer Resonate on top of what you guys have already done. You could see these things being cut in half by 4 or 5 times.
Yeah.
And that to me is incredible, that there's this synergy that I hadn't even realized we had.
Yeah, we've in just a few of the case studies, right, and in some of the protocols that have basically moved their incentives from what I think was the most popular one on Optimism, was basically just throwing sort of pool 2 incentives on Arrakis, right, emitting those to folks who are depositing in Uni V3 vaults, right. You've got multiple protocols who are spending basically over $1 million a year on purely, liquidity incentives. So that's $1 million plus a year in dirt tokens going outside their door just to attract, a pretty base layer of liquidity. Most of these aren't attracting super deep liquidity on their tokens. And when they've shifted to Velodrome, as Tao said, they're getting 2 to 3 times the liquidity on their dollar. So they've been able to basically cut their costs, cut their dilution down like significantly by 2 or 3 times. And that has a ripple effect for the whole ecosystem, right? Especially even, one additional layer to this is Optimism rewards, right? Right now, Optimism as a whole has a program that is trying to help attract, right, projects, have those projects be able to bootstrap their own liquidity to build and operate. And so there is a burn rate even on the sort of Optimism incentives. And so one of the reasons I think, Optimism is partnered with us is we likewise provide that multiple on the Optimism incentives, whereas each one being spent on liquidity incentives on Uni, you're going to get that 1-to-1. Each OP spent on, on something like Velodrome is going to give you that 2 to 3 times. And so hopefully, what we are doing is really supporting the ecosystem at large and allowing projects to build on Optimism with, as you said, a substantially reduced burn rate, substantially less token dilution, which allows them, of course, to invest in other ways.
All right. Oh, I mean, I feel like I really want to just jump right into what we're doing, but I know that I have to ask Adam to give a very quick rundown. Not sure if we're going to be able to top that, but Adam, do you think you can give a really quick explanation to everyone who's listening about how Resonate works? And then we can jump into the very, very obvious synergies.
Yeah, absolutely. So I guess, I mean, Alex, do you want to be my volunteer? Awesome. So basically what Resonate does is somebody asked a question in the feed that asked how Resonate is connected to Revest. So basically, Revest is it's a game engine, right? So it's the PlayStation that's in my living room, right? It's a really sleek, sexy box, but there's absolutely nothing I can do with it unless I buy a video game for it, right? So, and you might say, hey, Adam, but you could watch YouTube on it, but I could also do that on my TV. So it's still useless unless I buy a video game. So Resonate is the video game that is built on top of Revest, right? Now, what Resonate does is it gives us the ability to separate principal from interest. All right. Now, I'm going to operate on the notion that everybody here in the AMA understands what an FNFT is. If you don't, look us up on Discord after and I'll explain it to you. But right now, we're just going to pretend like you know. Yeah, look up on Discord. I'll explain whatever you want, or I'll send you to Anthony and he'll explain. But so it gives us the ability to separate principal from interest, right? So Alex, let's say you have 100 tokens and you find a yield farm that'll give you a 100% return, or I'm sorry, a 50% ROI on that on those tokens over 6 months. Okay, you deposit those 100 tokens into that yield farm. In 6 months, how many total tokens do you have?
Oh, you're asking the wrong guy if you want the on-the-fly math stuff. I'm gonna have to.
No, you want to step up to the plate?
Alex,
I should ask for volunteer. I'm sorry, man. You got 100 tokens.
You give me a spreadsheet and a few hours, I can be dangerous. But yeah, let's go with the economist for the on-the-fly math.
Okay. All right. We got 100 tokens. It's really easy. 100 tokens. You got a 50% return on those tokens over 6 months. You deposit those tokens into a yield farm. How many total tokens do you have in 6 months?
150, but I feel like this is going to be a trick question.
Nope, that's correct. You got the trick question.
All right, excellent.
The trick question, you think it's a trick question. You say 125? And we're like, no, don't worry. Everyone gets that wrong.
Now I have 30 tokens. I do the same thing you do. How many tokens do I have in 6 months?
45.
Perfect. But you're a smart dude. You understand the time value of money, right? You would rather have some money up front now rather than have to wait 6 months for your tokens. Just like anytime you win the lottery, a financial advisor is going to tell you, take the lump sum, don't wait for the annuity, right? So you go to the Resonate DApp, you deposit your 100 tokens, and I give you my 30 tokens up front for the rights to your interest of 50 tokens. Okay, so the net effect is now you have 100 tokens that are locked in an FNFT, and you have 30 liquid tokens, right? You can do whatever you want with the 30 liquid tokens. In the FNFT, if you want to get out of that position, you could sell it on a secondary market like OpenSea or LooksRare, Luxy, PaintSwap, wherever, okay? And let's look at the risks that you have. You really don't have that many risks except like price fluctuation. Other than that, you've got a liquid amount of tokens up front, and you have the initial tokens that you had locked in that FNFT. You were planning on keeping them anyways. You just wanted to hedge your long a little bit, so you're happy, right? Now let's look at the net effect for me, right? I had 30 liquid tokens, but I gave them away, and now I have the rights to the interest of 50 tokens over 6 months. So I'm going to experience two real big risks there, right? First off would be the interest rate fluctuation, right? And second would be opportunity cost, right? Now, what we initially started this whole thing off as was a way for treasuries to be able to manage their emissions, right? And they're managing those with native tokens, and you can't utilize native tokens from your treasury because God forbid you even think or whisper that we're going to spot sell them, right? The whole community is just going to lose their mind. And you can't deposit them into that yield farm because you'll lose the APR, but you can get you can utilize them in this fashion because you're paying an upfront amount and you're getting back more. So obviously, if in that situation, you're going to reduce your APR. What is this up? Is this a flowchart of what I'm talking about?
Yes, this is.
Oh, this is cool.
Actually, no. No, I figured I'd put an
Oh,
unrelated
okay.
one up on the screen. No,
Cool.
why
So,
not?
purchaser.
This is actually a cake
So,
recipe.
in this situation, right, I was the purchaser, right? I was the one with 30 tokens, and then in the bottom, the issuer, that would be what Tao. Well, Alex was initially until he got cold feet, and then Tao stepped in as the issuer, right? So that's it in a nutshell.
Yeah, so the basic gist here is that rather than the DAO paying out those 50 tokens up front, or I mean over the course of these 6 months, they pay out 30 tokens up front, and they purchase the rights to those emissions. So if those emissions are, their native token, great. If they're an LP tokens because you're using an auto compounder, also great. But the net effect is that you had a burn rate of 50 tokens per month, and you paid out 30 tokens up front, and you purchased your own burn rate. So you paid 50 tokens still, but you paid them to yourself. So you've cut your emissions, you've cut your burn rate by 40%. Perfectly synergizes with what we have been talking about here, with how you guys. So it perfectly synergizes with the same kind of stuff you guys are talking about in terms of decreasing the burn rates. So that is, I think, in a nutshell, what the two of us are doing together. And it's a great segue into talking about what that partnership looks like. So I'll go ahead, since I've got these numbers just kind of memorized, and then Tao, Alex, Adam, let's just talk about what this thing means, how it's going to benefit Resonate, how it's going to benefit Velodrome, how it's going to even benefit the overall optimism ecosystem, because we just keep stacking stuff. So, those of you who haven't read the Medium or got scared off by our big flow charts and fancy words, all we're doing is the Velo guys are going to be deploying 1 million Velo tokens into Resonate at launch. They're going to be created on Reaper farms, our good observer of the Bytebase. Since you guys are listening, shout out to you. They have set up some farms on Velo that use Velo USDC as the active farm token. So that's farming an LP on Velo. And what that means is that we, who are Resonate is built on ERC 4626. We've built an adapter for Reaper. So we plug that adapter into their existing farm, which gives us a 4626 endpoint. And we plug the Resonate system into that adapter. And now the Velo guys here, they can deploy their 1 million Velo and upfront to purchase. They go into that Velo USDC over the course of a month. Now, the averages on that farm, the numbers that are pretty easy to predict and maintain, are around, I want to say, I lied, I don't have it memorized. It's around 8%. So we're looking at a farm that pays 8% on a month. Okay, if I recall correctly, you guys are paying out 5% up front. So that means that for every 1 Velo you put out there, you get back an equivalent worth of Velo USDC, but at a ratio of 1.6x. So whatever, 160% back, which means that you are able to multiply your own Velo treasury. You're able to grow this system, and you're able to effectively begin to reduce emissions of your own token and get that thing locked up. I realize, okay, this is people are using this to reduce emissions. We're going to be able to go out and build it on Velo and just keep doing this same cycle with all the other tokens out there. But yeah, I think about encapsulates it. Tao, Alex, have I forgotten anything? Have I missed anything? And what does this mean to you?
Yeah, excellent. I mean, first of all, I gotta say it's fascinating the way that you guys are able to. I mean, we always talk about the financial Legos, right? And you guys are really taking that seriously and connecting the Legos across protocols. So, you know what? One way to kind of read this, what you just said is that we have sort of like our main pool of liquidity, which is Velo USDC. And every week We know we're going to get a certain number of votes. It's been happening week over week because we want to incentivize that pool. We want to keep good liquidity for Velo. Now, if you're a liquidity provider, you can go ahead and provide liquidity for Velo USDC, and you know the APR is going to come in at around, as you mentioned, 8% a month. That's how it's been. I mean, it's been kind of coming down a bit over the weeks, but it's around right now 8% per month. Now, what we're going to do, thanks to you guys, is we're going to give liquidity providers the opportunity to just take a bunch of Velo up front, right? Like a big bag, and then give us a right to actually get those emissions, because we have confidence that we want to get Velo. And we'll, of course, it's our project. We will want to get as many Velo tokens back as we possibly can. So what you guys are allowing us to do is kind of like find the proper market rate at which liquidity providers are willing to give us the right to get those Velo back for their service of providing the liquidity. So I agree with you. It's a fascinating kind of layer on top of our model that allows us to get Velo kind of brought back to us to reuse in however way we want. And in fact, we can actually get that Velo through emissions and continue to extend the program that we are building with you guys, right? And continue to save token emissions over time.
It seems that our stream is no longer streaming. I'm not sure why it is no longer streaming. So I don't know how that actually is working. I'm sorry, Tao.
No worries.
Okay. Let me just ask this guy. Working now. I threw my iPhone into a corner after I saw that message, and hopefully that is going to make my Wi-Fi run faster.
Yeah, Renora, you are 100% true. We've just been dropping the best jokes the whole time.
I don't know how to actually troubleshoot this. We could try. This is only doing. Okay, apparently it hadn't even been streaming full quality, which is crazy. I know I set that up. And let's see. Ending the stream actually ends the stream, and if we can go live again, we could try that. Or we could just keep rolling with it. Okay, so it fixed itself. Throwing the iPhone to the corner was the right call. I swear to God, I'm getting a hard line next week. Now, I'm sorry to cut you off. Please continue.
Wait, do you not have an internet connection, dude?
I got an internet
Are you streaming from
connection. It's a Wi-Fi connection.
Are you streaming from the hotspot on your phone?
I'm
You're the
streaming from my
CEO of
laptop.
what's about to be like a Fortune 1000
I am
company.
streaming from a Wi-Fi connection, sir. Unfortunately for me, I did not have an Ethernet connection because I live in an apartment that was built in the 80s. And they've just not wired up for Cat 5. Yeah. Someday I'm going to get, I don't know if you guys seen them. I actually, okay, I'm not saying someday. I literally got it sitting in the next room. I just haven't taken the time to wire it up.
YouTube.
The power lines, the power line jobs, right? YouTube's having issues?
Yeah, Twitter. Everybody's moving to Twitter.
Okay. I don't understand why YouTube in particular would be having issues. Whatever. It'll be recorded. People will be able to watch it. Let's keep going.
Sounds good to me.
Sounds good.
All right. So, Tao, I believe you were in the middle of a fantastic explanation of how we best work together and how these things add on top of themselves. So, please.
Yeah, exactly. So as I was mentioning, Velo USDC is our main liquidity pool for the Velo token itself. So we have confidence that it's going to continue to be incentivized, right? If you're a liquidity provider, you're going to continue to get emissions. And we are willing to basically pay up front with a bag of Velo to the liquidity providers that basically give us the right to get those emissions. So that 1 million Velo that you mentioned ideally would multiply over the year as we start getting those emissions back to us. And then we can reuse that Velo that we are getting back extend the program or to use it for other purposes, right? So as you mentioned, it's basically extending a runway by kind of redefining the duration, or at least from our point of view, kind of restructuring the duration of when we get those emissions and how we pay them, right? So it is an opportunity to basically multiply the velo that we currently hold over time, because we know that one, the incentives are going to continue to come, and we have a lot of confidence that we are okay holding that risk because it's basically our project. So we're happy to hold the risk of waiting for the emissions to come in, and then it's an opportunity for liquidity providers to basically lock in the velo now, which of course they could then use to, if they get a bunch of velo now, they can then use to lock the velo and then farm the bribes and fees that we mentioned earlier. So it's an opportunity for liquidity providers to very quickly accumulate a large holding of velo by basically giving us the rights to the emissions over time.
Yeah, you touched on the point that I think I'd actually forgotten to hit, which is the liquidity providers. And this is one of what you've just touched on is two things. First off, it is a huge benefit to you guys and Optimism as a whole, because you're getting TVL that's locked in there for that entire first month. It can't go anywhere. It's not going anywhere. And the people who put it there, they get a benefit, and they get this upfront payment, which in a very interesting way. This is something that I really, really need to actually sit down and do the math on. Tao, I'm sure you're going to find this kind of as fascinating as I do. But that's almost an insurance against IL in a way. You're getting these tokens now for providing liquidity. And depending on how you expect IL to occur or not occur, those tokens are a complete hedge against its potential existence. I don't know how the X times Y equals K math plays back into itself, but I do know that someday I'm going to sit down and work through that fairly, recursive derivation.
Yeah.
I gather you live for this stuff too. These really weird looping systems that when you build them on top of each other, they just start producing the craziest things.
Yeah, it's fun. It's fun. You do see some interesting opportunities that arise, right? And yeah, as you mentioned, as a liquidity provider, you have the opportunity to hedge and upfront use that velo for other purposes and perhaps farm on top of it, so you can end up getting, even as a liquidity provider or as a participant in this kind of game, you get the opportunity to even extend your yield, right? So even though
double down.
Exactly, you get the chance to, again, like VE Velo right now is yielding really high APR. So if you can take that Velo up front, lock it to start voting, you may end up with a much higher yield overall, combined between the Velo that you just locked and the LP that you had provided.
We've got to do some kind of a rigid just structural analysis of this math at some point. That I would really like to see someone put together an analytics page or a gigantic spreadsheet. I know there are people who do that sort of thing.
Oh yeah,
Anthony, daily.
So, yeah, we should ask our analyst. You're correct.
I'm just saying he already does it. I'm pretty sure it already exists.
Yeah. All right. I mean, like, you know what anyways, time to jump into, we've been talking about phase one, but you and I, we've all talked about phase two. So what does phase two of our relationship look like to you guys pending, success, this first effort? Where do we go from here? Because we've been bouncing a lot of ideas around.
Yeah, I mean, we've discussed the opportunities related to using the Velo NFTs themselves, right? Like the VE Velo opportunities. Again, optimizing there for yield, for strategies around voting and whatnot. I would also like to hear, I mean, I feel like you guys have also this kind of like mindset where you can connect a lot of dots. You've been working with a lot of protocols, also kind of seeing different token models. So I'd be also very curious to hear what you guys have been thinking in terms of what could happen next. But I mean, if you think about the Velodrome mechanics, you have on one side the liquidity, and on the other the lockers, which to me are kind of like the key stakeholders in the protocol.
So to me, right now, I think the thing that I'm most excited about in our phase 2 is optimizations. And we've talked about that a little bit. But this would, I mean, obviously, I think I can't, because that's their alpha and not mine to share. But I think we both know somebody who's, looking into this concept as well. And with our ERC 4626 expertise and their expertise in that field, having an optimizer for VE Velo to the point that you can use a VE in Resonate, that to me is a fascinating concept. And this is Jesus, who was it? Adam, we've been talking with, I can't say their name either, but we've been talking with a few other people who are doing NFTs. I got to be careful. I got to keep my mouth shut. But we've been talking with other guys who are doing these sorts of optimization routines already on Uni V3 NFTs. So their systems that they're working on, we are already talking with them about building in other guys who've done on these sorts of optimizers, building on that, and then spreading that down into VE NFTs. Because to me, one of the coolest ideas is to have a VE NFT inside of a Resonate pool where there's abstraction here. But you have an ERC 4626. You deposit, your VE NFT into it, or your VE, your Velodrome tokens even. But you deposit what you've got into it. You allocate to it in some way. Delegate, maybe, is probably the right word.
Mm-hmm.
And it placing its votes every single week based on a combination of internal and probably also external inputs, since if you get this thing set up right, you can even monitor off-chain conditions, like snapshot votes, to know who's coming when, where, and be perfectly positioned to reap the most rewards from that one system. So to me, that is really where this phase 2 heads, is just getting more and more in depth with what we can do with the VE NFT.
Yeah, and related also to,
I'm going to take a quick aside.
Yeah.
I'm going to take a quick aside. When can the people ask questions? We are saving that till probably the last 10 minutes. So stick around. Where can we ask questions? What do you guys think? Discord?
No, YouTube's good. They're already all on YouTube.
All right. So please continue.
Yeah, I was gonna mention, going back to the topic of kind of changing the duration of cash flow, or kind of trading on the duration of cash flow. The NFTs, the VE NFTs as well, generate yield, right? They receive yield through the votes. So there could also be some opportunity there. I think this one is going to be more volatile, right? Obviously, the yield that a vote that a voter receives depends on many factors, including the value of the NFT, the amount of bribes that are coming in, the fees, etc. But there could always be a market also for trading on that yield, right? Kind of getting upfront. Again, without having to buy and lock Velo, you could take a bet on the yield that an NFT can generate over time. If there's an optimizer where it's going to take kind of like the best possible path to voting strategy, and you want to bet on whether that optimizer is going to generate a certain amount of cash flow or yield in comparison to the value of the NFT, you could perhaps take a bet there, right? And it's a lower entry point, so you don't have to buy and lock Velo, but you can still reap the benefits of the yield that it produces. And if you're a VE NFT holder, you can also perhaps trade that yield and get that upfront as well. So that could be also something to consider. Maybe it's a little bit trickier,
Velodrome.
but it's related, right?
I love that idea. You're basically betting on the futures of the fees almost
Exactly.
at that point. Yeah, that is brilliant. So if you anticipate that a token is going to have a run almost, you could say, all right, this one right here up front for this value, because I'm pretty sure this is going to happen. But then that's going to happen, so I'm not sure it's going to be sustained. I love that idea. That is really a really cool use of the platform.
Yeah, exactly. That's the kind of opportunities that we can see, right? And again, optimizing kind of like the market view or the players, their view of what's coming in the next few months, especially in times like now, right, where wherever direction the market is going to take seems to be like it's going to be a strong one. So people are probably wanting to either hedge or make a bet on a potential positive outcome or a negative one, whichever one people feel is more likely.
That sounds good to me. So let's go ahead and run through some questions. We've got about 7 minutes left. And the stream on YouTube just, I think, stopped working. Get questions. Guys, I'm sorry about the YouTube. I do not know why Restream did this or how that works. So we will have to go ask Austin and Clay how to make this system actually not crap out in the middle of a live stream. But if there are any questions, I guess post them in the Discord or on the Telegram, and we'll try to go from there. Otherwise, let's run through. Are there any questions that we haven't already hit? I don't think there are. Yeah. Adam, any questions? You've been following this? Tao and I have been going off on some crazy tokenomics stuff.
Me?
So, yeah.
Dude, I never have any idea what you guys are ever talking about. Ever.
Yeah. No, I figured.
Yeah, no.
How did you get into this? I came into this just for a really off the wall background. Have you always been an economics guy?
Yeah, I have. So I mean, I started studying mathematics, but thought economics and finance was a better way to apply mathematics than kind of like the abstract way on which like I guess the scientific path takes you.
Hey, Rob, I got a question for you. Oh, I'm sorry, Ty.
Yeah.
I didn't mean to interrupt you.
No, go ahead. Very curious.
It's could we see collateralized debt markers backed by Resonate FNFTs? And that comes from Renora.
Collateralized debt markers. I don't entirely understand what that means, but I
collateralized
think
debt market.
Market. Oh, collateralized.
Sorry,
Backed by Revest FNFTs? Sure. It's absolutely something down the line that I think would be doable. It's not something we're focused on right now with Resonate, but absolutely. I think FNFTs could work real well for uncollateralized lending. If you were to set up AAA institutions with each other and give them an on-chain way to represent loans, but that's more of a question for a Revest stream. Let's keep this one to Velodrome, Resonate, what we're up to. All right, Tao, that is I could see how that trajectory would work. I was originally doing a PhD in mechanical engineering before I dropped out, so I understand the fascination with partial differential equations, the math brain, for lack of a better term.
Yeah, honestly, I can't imagine a more interesting place to work in than crypto at the moment. If you are at all interested in anything related to economics, I mean, it's kind of like a place that's redefining or at least recreating economics. Sometimes you find cases where you end up going back to what was working already, but in many instances, there is a lot of fascinating innovation happening. So, it's really, really fun to watch. and also where you can, leverage skills from all kinds of fields, right? Like, I don't want to say it's all economics. In fact, I'd say, as you guys mentioned earlier, Velodrome has been successful also, I mean, in a very large part because we've been continuing to stay, very active on socials, making sure that people know that we're there, supporting our community. Initially the app was, I mean, we still have some smaller bugs that we have to deal with, and we just continue to plow. Alex has been an amazing leader, kind of getting the project together, getting us all aligned, pulling again all types of skills, the contract devs with people more on the business side, and bringing kind of like that into a cohesive story. And then we put our best face forward, of course, but in the back end, we're always kind of dealing with something, which is a really cool part as well. You have these teams that there is no slack, right? That's something that I actually really like about crypto. There's zero slack. Everybody's contributing. Everybody's doing what they need to do. There are no employees that are just sitting around and like clocking it in, right? We all have to do what needs to be done because we don't have extra capacity.
I got another question from Mr. E, and that is, how does Resonate help Velodrome in an extended bear market?
So I would say at that point that Resonate offers Velodrome the liquidity. I don't see Velodrome being hit. Velodrome, we are all already in a bear market. Let's throw that out there just to begin. We're already in an extended bear market. But getting that liquidity locked in and locked down for, a month at a time or 2-3 months at a time, depending on which pool you're looking at, to me, that is, and I want to hear your take, Towns, but to me, that is again, shocks the system. If, let's say, I don't know, Chinese housing market collapses in the next 2 weeks and Velodrome has locked up into Resonate, everyone panics. Everyone flips a shit and loses their minds. So it's time to sell. And this is an interesting thing that a lot of people don't realize about last May. But even with these projects that had lots of locked up tokens, there's a few examples I can use. Out of just sheer respect, I will not use them. But we saw projects have 30% of their liquidity pulled. And in that 30%, what would happen is people pull that liquidity, they turn around, they take the governance tokens, put it right back into the pool they just pulled from. So this was actually a pretty big token on Phantom. I actually had their lead dev tell me all about this story. And everyone's wondering, well, how is this happening? Aren't all the tokens locked? All the tokens are locked, like a 70% lock rate. Well, that's how. The liquidity tokens, if they're not locked up and people panic for whatever reason, it turns into a death spiral. Death spiral is a strong word. It turns into a spiral effect. People see other people pulling and selling, they panic, and you end up with something of a prisoner's dilemma. You've managed to convince a significant amount of people to lock up their liquidity tokens because you're paying them up front. When that panic cycle hits, there's not much unlocked liquidity to panic. And so by the time that it unlocks, the moment of fear has passed. And now you're in a much better. That's what Resonate does. It offers a buffer. It makes it so that groups like Velodrome, they don't have to worry about that kind of a crazy bank run because it's locked. Tao, do you have anything to add? Would you have anything to slap on top of that?
Yeah, exactly. I mean, as you say, we were born in the bear market. This is kind of like the Bane meme. That's all we've known at Velodrome. So we're familiar with the bear market. We're born in it. In fact, we were born just around the Luna crash day. So that was our lunch. So we're familiar with it. It's if we do have a really extended bear market, it's going to be all about sort of surviving the bear market, right? And the model is one that is designed to be sustainable, and you guys will help us also increase the sustainability and, as you say, kind of buffer a bit some of the bigger movements, especially on the liquidity side. I don't know, Alex, if you have any other points of like how to survive a bear market. It's about, you know, staying as a team, just kind of continuing on.
I'd add in that your point about teams really did resonate with me. I mean,
It resonated.
It resonated.
Shut up. Get out of here. Get out of here. You're horrible. You should feel bad. You should feel bad for that.
I don't.
Anyways, no, I get that. Like we have that same thing. Everyone pulls weight. Everyone is constantly moving, and it is the greatest feeling of all time. I think there is something, and I think that actually brings us to a pretty good place to sum up and kind of end on, which is.
I got one more question from a.
All right. Give me the question, then we'll come back because I want to.
Crypto Matt from Twitter wants to know how is Resonate going to grow?
How is Resonate going to grow? So we grow by making friends with people like these. These guys are fantastic. That what they've built is fantastic, and they have everyone on their platform as potential customers for Resonate. That's the thing, is when we go and we make friends with somebody who owns a DEX, owns a strong, runs, somebody who runs a farm, anyone who has a platform that they are accruing others liquidity into and generating economic value, Resonate can then go to everyone else downstream and say, hey, you've got this platform. It's already working for you, or you're already reducing, your emissions through it. Come on, get on board. We'll set something up for you. So we have, I think the term I've heard is network marketing. I believe that's the correct term. And I mean, that's why we have the biz dev team we do. That's why Adam here has, 5 guys running around? Knocking on every single door they can get to.
Yeah, currently 40% of our team is business development. So these guys reach out to protocols 33%. All day, every day. What's that?
33%.
6 out of 15? That would be 40%. At least with my calculator, but.
Hey, you're right. It is 6.
But they talk to every protocol they can. They talk to people that those protocols introduce us to, and we're constantly meeting new people. Currently, we're engaged with mid 3 figures of protocols to start deploying onto Resonate, or even introduce us to other people that plan to deploy. So we got a lot going on.
All right. So I think we can go ahead and head toward that last discussion point, which is future. To me, I'm just gonna. I want to hear your guys' take on this, but when I'm looking at the state of DeFi right now, and this is kind of a very closing talking point, I'm looking at these big guys who've been around for a while, and I'm seeing that after this past bull, so that means that guys who are in our shoes, who are these new up and coming protocols, we're in an excellent position to go out there and be the next protocols. So that to me is what the future looks like. The future looks like spreading this where I imagine you guys have similar views. There is a lot of growth to be had. So, I mean, if you guys have any comments in that vein, love to hear them. Otherwise, this has been fantastic. What's y'all's vision?
Yeah. I mean, to be honest, from my point of view, DeFi is going to be enormous eventually. And I agree with you. I think at the moment, some of the bigger protocols are either so big that they need to move slowly, or they have now a really, kind of either design or not, they have DAOs that perhaps kind of keep them moving very methodically or not at all in some cases. So us as kind of like the new, more nimble protocols or more nimble projects get a chance to kind of do all this kind of like try different things. Sometimes, you know, hit our heads against the wall if something isn't working, but then try again because we don't have the, you know, as many kind of breaks on our systems yet. So I do see here the opportunity to continue innovating. Obviously, DeFi has a long way to go. You know, you still get users coming in, and it's confusing for the majority of people. And I understand why it can be really confusing and not as intuitive. So I think that's sort of our goal, right? To make it as easier as possible for people to use and to do whatever they want to do, right? If it's to make money, then we help them, kind of give them the tools to do so. Right now, it feels like it's very much infrastructure, so it's okay if it's complex. We consider Velodrome to be sort of like a layer of infrastructure, basically for protocols. But of course, it's also open for any retail users. Whoever wants to use it, they can come in, right? That's the whole point. So yeah, I honestly think that the level of opportunity is, you know, off the charts. We just need to kind of survive these cycles, just be patient, it'll come, and continue building. And honestly, again, the people that I'm working with, it's the best team that I've ever worked with, and it's a lot of fun to do so. So I'm very pumped for what's the future.
All right. 100% on board with that. All right, Alex, you got anything to add, or?
No, I just I appreciate you guys having us on and the great conversation. Looking forward to everything we'll be building together in the months to come.
I'm so excited to be working with you guys, and it's been an absolute pleasure hosting you. And we look forward to continuing to develop this relationship and hopefully meet up in person sometime.
That'd be awesome.
You guys have a fantastic afternoon. Thank you to everyone so much who watched. I'm sorry about the YouTube. We'll get it fixed next time. Y'all take care and have a great
Thank you,
week.
guys.
Bye-bye.